Phoenix home prices are cooling, and that's not just the weather. Inventory is climbing, rates are bouncing all around, and if you're a buyer, you finally have some leverage. So let's break down what's happening and what it means for you and where we could be heading. My name is Dan Friel with Friel Mortgage. We're powered by Barrett Financial Group. We're seeing a shift in the Phoenix housing market, and fast. According to the Cromford Report and Redfin data, Phoenix joins metros like Austin, Jacksonville, and Sacramento in leading this nation's cooldown. Check this out. The median sales price just dropped from $460,000 to about $446,000 in the span of weeks. That's not just a seasonal dip. That's a market reacting to more supply and cautious demand. So inventory is surging and buyers are cautioning. Inventory keeps climbing, over 26,000 active listings as of April 26th. That's nearly 10,000 more than we had this time last year. Sellers are listing, but buyers, they're pulling back. Every single month in 2025 has outpaced both 2023 and 2024 for new listings. April just clocked in over 10,500 new listings. That's more than any April in the last 3 years. So what does this mean if you're a buyer? Opportunity. Prices are softening, inventory is growing, while rates are still around the high sixes for a conventional loan, the par rate. We've seen some movement. Mortgage rates are bouncing between 6.6% and 7% for the par rate, but last week closed at the lowest since early April. So if you're looking to buy, this might be a moment to negotiate and refinance later. We're seeing a lot more rate buydowns, seller paid closing costs, and even renovation loans to start to come back into play. So if you're tired of renting, this could be your setup you've been waiting for. About 40% of all transactions in the Valley have seller credits on the last appraisal report that I just saw this week. So I really do believe they are inflating home prices a bit more. The net result is actually lower than what these reports are seeing, because let's say the seller says, hey, I'm listing this home for $300,000, and the buyer says, cool, here's your $300,000, but I want 3% back towards my closing costs. That net the seller gets is actually quite a bit lower than the list price there, and that's not shown in these reports, so something just to remember. And here's the question I get all the time. Dan, when are rates going to go back to 4%? And the honest answer is not anytime soon. I mean, we might get close, but in the next 12 to 24 months, I wouldn't expect 4% for a conventional loan. The only times we've seen rates that low are during the COVID crisis and after the 2008 crash, which both required major Fed action, bond buying, and economic pain. The long-term averaged closer to 7%. So don't wait for a unicorn rate. And I hate saying this, so excuse me if I throw up in my mouth when I say this, but marry the rate, sorry, I can't even, marry the home, date the rate. And there's some truth to that. So if you can get a good deal on a home and the payment's okay now, the likelihood you can refinance and lower your payment in the next 12 to 24 months is high. But again, I don't think it's going to plummet and go down to 4%. And one thing to note is when rates do come down, but more buyers will come out of the woodwork, and you might turn this market into a seller's market if competition increases. So buying when it's slow usually gives you more buying power, stretches that dollar further. And again, you can always refinance as long as it makes sense, and that's something I can go over the pros and cons every time with you. So the Cromford Market Index puts Phoenix at a 77.4. That is a full buyer's market. Supply is up to 106.1. That's 6% above normal. While demand is down at 82.1%, that's 18% below. That's a big gap and a lot of pressure on prices. Some cities are cooling faster than others. Tempe just dropped 15%, Scottsdale dropped 8%, and even Chandler fell 8%. Meanwhile, Buckeye and Surprise are seeing a slight pickup. Could be investor activity or affordability driving that. Home prices are cheaper out there. It's a little bit of a hike from the Valley, and we're seeing that. So where is the market, hot or cold? Most of the map is cold to balanced. Central Phoenix, parts of the East Valley are still sluggish, but there are warm pockets like parts of Chandler, 85224, Glendale, and the West Valley, where buyer demand is still holding on. So here's some advice for buyers and sellers. Buyers, you got inventory, price leverage, and tools to reduce your payment. It's not a bad time to act, especially if you're planning to stay long term. Just make sure that payment's right, and the rest will generally work out. Sellers, this isn't 2021. If you overprice, you'll chase the market all the way down, and I see it happen every day with sellers. The data doesn't lie. So price strategically or expect to sit on the home for a while. Want to see what your buying power looks like right now? Hit the link in the description for our free mortgage calculator, or you can book a 15-minute discovery call with me and we can just get right to it and show you what you could qualify for, or I could help problem solve to get you in front of the right program. Whether you're buying your first home or your fifth, we can help you make a plan. So if you found this video helpful, like the video, subscribe, and share it with someone that will be house hunting in Phoenix right now. I'm Dan Friel with Friel Mortgage. Stay smart, stay strategic, and I'll catch you in the next episode.